In this episode, we speak with Mark Gormley, partner at Lee Equity Partners, a middle-market private equity firm that partners with entrepreneurs and management teams primarily in the financial and healthcare services sectors. Going on nearly 2 decades, the firm leverages a thematic investment strategy and deep sector expertise to collaborate with talented management teams, accelerate growth, and build market-leading businesses. Lee Equity currently manages $5 billion in assets. Mark joined the firm in 2006. Prior to that, he was a partner and co-founder of Capital Z Financial Services Partners, served as a managing director at Donaldson, Lufkin Jenrette, and was a founding member of the insurance group at Merrill Lynch. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Mark, thank you so much for joining us today. It's a delight to be with you.
It's really nice to meet you, RJ, and pleasure to speak to you today.
As I was kind of refreshing and preparing for the interview, I recollected that we had actually met briefly many years ago. I was on the investment banking side at BofA Securities, and it was 2009, I believe, and we were showing Lee Equity a deal in the mortgage servicing space. And I remember interacting with you and your team, and it was a very good experience. You know, I was kind of in my younger years during that investment banking career, but very nice to kind of interact with you again today. You know, maybe where we could kick off is hear a little bit about the origin story of Lee Equity. You have a famous founder in Thomas H. Lee. So maybe for the benefit of our audience, we could hear the history of the firm.
Sure. So happy to give you the background. So as you may recall, Tom were the early investors in the growth equity investment space. He started his career in 1971 when there were very few private equity firms in the space. And because of his background, he was at First National Bank of Boston. He was responsible for lending to Route 128. And you may recall today, Route 128 is all the really high-tech oriented firms. And so he had broadly heard of something called private equity. He didn't know totally what it meant, but it sounded interesting. So he left First National Bank of Boston, and the only relationships he had were with Route 128 companies. So they couldn't do traditional buyouts where the few firms that existed at the time were really buying traditional manufacturing, electrical component manufacturers and the like, where you could put a lot of leverage on those businesses. You know, the businesses that he was familiar with and had relationships were really more rapidly growing businesses. And so, you know, he started trying to develop investment opportunities with his client base. And because they were rapidly growing, they were really very, very lightly levered. And that strategy was very, very successful. And for the next 20 years or so, you know, he continued that strategy of investing in rapidly growing businesses, lightly levered, founder-owned, rapidly growing businesses. And that was really the beginning of what today is known as growth investing. For 20 years after he did that, as he looked back, he looked at what was the most successful investment strategy during that time. And it was really his track record investing in growth-oriented businesses. So when he and I got together in 2006, we really decided to go back to Tom's root of growth investing, partnering with entrepreneurs who had built good businesses, who we could partner with and help grow those businesses. My background was I've spent my entire career either advising or investing in the financial or healthcare services industries. And so we married Tom's growth investing heritage with my investments experience in the financial and healthcare services. And that's what started Lee Equity in 2006. And fast forward 19 years, today we're one of the preeminent investors focused on the financial and healthcare services space. In the growth investment space, we're trying to find entrepreneurs who have built good businesses, who we can partner with and take those businesses, institutionalize those businesses and take them through a growth transformation.
Mm-hmm. And you're very focused on the services spaces, whether it's business services, healthcare, financial services. Can you tell us about maybe where you spend the majority of your time and, you know, maybe the types of situations that you find are good opportunities?
So I spent all of my time in financial and healthcare services. And in fact, our most recent fund, we've narrowed it down to only investing in those two sectors. And in each of our two industry verticals, we are thesis based. So we try and develop theses around where's the puck going? What are the underlying trends in the industry that are create interesting opportunities? And then we try and find entrepreneurs that have built good businesses that are consistent with those themes. I'm the only partner at the firm that spends time in both of the sectors, but we're typically finding an entrepreneur that either has developed a world-class product or a service in a region or in a very narrow definition of a service, with a view that we can either take those services and develop them on a national basis or broaden those services to provide, broader set of services to their customer base. And 50% or more of our opportunities are where we're the first institutional capital in. And those are the opportunities we'd like to invest in, where we can really partner with founders and enable them to continue to grow their businesses and live their dream that they had when they started the businesses.
Mm-hmm. And given that you're typically focused on these world-class businesses, presumably other firms are finding them too, and you have to compete maybe in some situations. What do you typically point out is the difference with partnering with Lee Equity versus another firm?
So in the businesses that we're investing, we have great pattern recognition. We have either already invested and built market-leading businesses, or at a minimum, we've seen most of the companies in the sector. And so we can bring those sets of skills and experiences to the entrepreneurs. So recent investment, we just announced last week an investment in a UK wealth management business focusing on the mass affluent. Well, in 2007, there was a little publicly traded company called Saunders Morris Harris, and it had 10 different divisions. One of the smallest of the divisions was a little business called Edelman Financial, and they were providing services to the mass affluent. We ultimately took that business private in 2012 and grew that business on a national basis. Today, you fast forward that business and it has 275 billion of AUM, 500 million of EBITDA, and it's the largest wealth manager focusing on the mass affluent space. We've repeated that in the US subsequent to the Edelman investments 2 additional times, most recently in a business called Pure Financial. And so when we met the Shackleton team, they were executing exactly the same strategy, just in a different geography. Mm-hmm. And so we think that the UK market is a little behind in its development curve versus the US market. So we were able to take our 15 plus years of experience dedicated solely on this space, and in partnership with our operating partners, are able to export that knowledge to the UK. And hopefully we can accelerate the growth of Shackleton and of the UK wealth management business focused on the mass affluent space.
Excellent. And then mentioning the operational capabilities that your firm has, in what areas of the operations would you look to maybe deploy some of your team members? And to what degree do they become integrated into the business, or are they, kind of consulting? How would it work in this situation?
So we have 2 different approaches that we do in helping our entrepreneurs. The first is just in our staff. We typically, for each of our thesis areas, will typically have a team of 3 to 4 investment professionals whose sole responsibility is spending time in that very narrow thesis area. They are then complemented by 3 to 4 operating partners who have built successful businesses in that sector. Just that knowledge base is very valuable. We have 6 or 8 individuals whose sole responsibility between them is to focus and understand that very narrow segment. The second thing that we do is we have operational expertise. So we bring our portfolio companies expertise not only on how to help companies grow, but increasingly we're developing expertise where we can help them on HR and people issues, on their finance issues, and on their technology issues. And those are sort of core to sort of the value proposition that we bring to our operating companies. And then importantly, just the expertise that our operating partners bring in just working with companies through that growth transformation, married with our team, really provides that entrepreneur a set of unique expertise that few firms have.
Mm-hmm. One thing I always like to talk about is culture at a firm. And you've been part of a series of highly reputable organizations and firms. I was happy to see that one of the other partners currently on your team is one I had met with also back in 2009, and he's still there. That's Collins Ward. Tell us about how you retain a cohesive partnership and how you would define the culture at Lee Equity.
So we pride ourselves on developing a very cohesive, cooperative culture. It's not the tenure of individuals making the comment, it's the strength of the argument. And so we're trying to make sure that we provide a forum for all investment professionals to sort of voice their opinion. So if you have an interesting thought or idea, an associate or vice president, those are as important as any comment that any partner could make. And so, having a very flat, entrepreneurial-oriented environment and structure, we think is really important because it allows everybody to feel like they're a critical part of the team, which they are.
Mm-hmm. Now, speaking a little bit more about value creation, and I assume like every situation is different when you bring to bear your operating team. What areas, the field of growth investing, it can entail different things to different firms, and there's kind of different segments of growth investing. But how do you find you're most bringing the presence of Lee Equity into a situation? In what ways do you help companies?
Fundamentally, we start when we partner with an entrepreneur, we start with a notion that let's build world-class, durable, sustainable businesses. Let's assume that we're going to be sitting in this room, in this situation 20 years from now. Let's not get caught up in the traditional private equity fund cycle where you're making investment decisions based on a 4 or 5 year exit timing for the private capital. Let's focus on a 20-year time horizon. Let's build a world-class business. And we say, let's make every decision based on an ROI basis. Not an ROI that's going to be, whether it's going to be 1 year, 2 years, 3 years, is it going to be good for the business? Is it going to make us a better business? So that's the fundamental from where we start. We then marry that with expertise in the specific sectors that we're investing in. So if it's insurance distribution or wealth management or on the healthcare side, on the behavioral side, or a number of other sectors, we have made multiple and successful investments in that sector, and we're bringing that expertise. And then we're marrying that expertise and that knowledge and history with our operating partners and our history of working with growth-oriented companies. So it's a very all-encompassing, holistic approach to providing services and help in whatever way we can to those entrepreneurs.
In terms of firm evolution, sometimes the temptation is to grow dramatically in fund size, and LPs then scratch their head and say, well, then are you going to veer away from your original strategy? Maybe if you could just share a little bit about what your vision is for Lee Equity as it heads into kind of maybe future funds or the evolution of your firm.
So we're going to stay very focused on their two core industries of financial and healthcare services. We're going to stay focused on trying to be that first institutional capital in and partnering with entrepreneurs who have built good businesses. And so as a result, we're going to keep our fund size in check. Some firms have been very successful by growing their fund size and then investing in similar industries. That takes them into a different investing strategy. For us, we're going to stay very focused on investing with exactly the same strategy. So while we'll grow our fund size from fund to fund, and the GPs are the third largest LP in the fund, we're very focused on creating alpha for our LPs, for our entrepreneurs, and for ourselves. And we have a very successful, proven model in our two industry verticals. And so we're not going to vary from that.
One thing you touched on earlier, and just like to maybe have a little bit more info on this, is the use of technology in the portfolio companies you invest in. To what degree, every firm has a technology component where they try to expand and truly help out their portcos. But maybe is AI becoming highly relevant to what you're doing?
So AI will become relevant to both of our industries, meaningfully relevant to both of our industries over time. We are not investing in businesses that are dependent on technology, but we are investing in businesses that in many instances are tech enabled. So we need to be aware of the trends, aware of the impact that AI will have on our industries, but we need to be close second followers. None of our companies are competitive dynamic is such that they're in a position where they need to be sort of the leaders on technology. But we need to be very aware and thoughtful and careful about what are the changes that AI may have in our businesses and make sure that we're always testing that new technology so that we're creating bigger and better, more successful businesses.
We're heading into the tail end of the conversation. I have two final questions I'd like to ask. One is, can you tell us about a person who has had a profound influence on you?
Yeah, that's an interesting question. I think from a personal perspective, I hate to sound so corny, but I think it would be my father. He was the most disciplined, hardworking person who had a deep thirst for knowledge and was always looking for new information and better answers. And that has been an important driver of who I am today from a personal and from a work perspective. From a work perspective, I think I would say that there was a colleague of mine in my days as an investment banker at Donaldson, Lufkin Jenrette, a fellow by the name of Pedro Galban, who was in a very, very competitive world of investment bankers, was not only the nicest investment banker I ever met, he was also extremely knowledgeable. And the combination of those two things made him a great investment banker. Mm-hmm. And so what it taught me was that you need to develop your own patterns and your own skill sets. And Pedro, his thirst for knowledge and love with people and way with people made him the best banker to the insurance industry. And that left a lot of impressions on me in terms of how to behave on a work perspective.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Well, I'm very passionate about a number of things: education, the environment, and helping those who can't help themselves. Those are my three passions. I demonstrate that. I'm on the board of an environmental group called Conservation International. It's a global business. I'm particularly focused on the oceans. And whatever free time I have, I spend trying to think about, how do we protect our oceans so that they're here for generations to come? Because if we don't do something pretty quickly and dramatically, I'm afraid that my kids and certainly your kids will have the same opportunity that we've had. So that's one of the areas I'm highly focused in trying to improve.
Excellent. Well, Mark, I want to thank you again for taking the time to chat with us today. It's been a wonderful conversation.
Thank you so much, and thanks for the time, and it was great to reconnect again.